Welcome to the first podcast of 2020. A new year, a new beginning, new opportunities, fresh challenges. It's all happening and we are entering a very exciting year. You may wonder how this year can be exciting. I think that given the current state of the economy, the trajectory of growth, and the macros, the sheer extent of the challenges before our economy will make 2020 a very exciting year. We don't have an option to counter the challenges. So it's like running to save your life. And in that situation, what are our choices? A, you take it on and fight it out. B, you give up. As a country, I don't think we have the second choice. So principally, this economic situation will have to be aggressively countered, fought and overcome. And that is what I expect our economy to do, a government to enable and investors to embrace. What should we expect in 2020? The most critical things in 2020 that I think should play out. First, flows should sustain. Be it FDI or FII, we need very strong flows in 2020. The reason is that both government and our large corporations are looking to sell shares in their companies. Government needs money from sale of shares to balance its books, to reduce its deficits. On the other hand, large Indian corporations and groups need huge amounts of money to deleverage themselves because their current levels of debt do not give them much headroom to borrow more. So if they want to grow, they need to raise capital. Their equity capital is inadequate, so they need to raise more capital. So that is most critical for Indian corporations. Given this situation, flows need to sustain. The second point, which is very critical for all of us, is that 2020 is going to be largely a disinvestment centric year. If you see how disinvestment played out in several years of the past, it was mostly tokenist. Government would sell its stake in several public sector undertakings to either ETFs or to LIC. This won't do. This year, you need to succeed in strategic disinvestment of several businesses. A few businesses have already been listed for this financial year. Several more are expected to be announced in the budget on February 1. The success of these well-intended moves will determine how the world views India as a serious reforming state. So, disinvestment-centric moves in the market can only become central to our investing in 2020. Now to the third point. Leadership is likely to see rotation. I'm talking about the market leadership. So companies that did exceptionally well or sectors which did exceptionally well in 2019 are likely to see a pause, a breather, as investors are drawn to underperforming sectors of the recent past which are showing very promising signs of the future. So leadership rotation is another very important aspect of 2020 which we should be very cognizant of. So these are three things which I think will determine market performance in 2020. We are likely to see a lot of interest in all three, and we are likely to see that interest grow significantly if intent is translated into decisive actions, and that ball squarely rests with government. Government needs to prove that its intentions are likely to be translated into actions, and the first few actions will then set the ball rolling for future reforms. The coming months are going to give us a lot of opportunities to understand what among these three things will work well, what will not work well, how we can adapt to the level of success in all the three areas, and how we can get maximum out of the reform that is going to take place in 2020. So there are assessments, there is preparation, and there are actions that need to be taken by us on the basis of what we think will happen in leadership rotation, disinvestment, and flows from FDI and FII. So prepare yourself and stay well aligned with the trends that are emerging. You are likely to make 2020 a great year for your investing. Happy investing, and keep watching our channel. Thank you.